Hi, welcome to ArkIntel. Imagine this, you open your mailbox one morning and find out your tax bill has just skyrocketed. Your paycheck isn't going as far as it used to, and everything seems to be getting more expensive. It sounds like a nightmare, doesn't it? But this nightmare is closer to reality than you think. In 2025, tax cuts that most Americans have relied on for years are set to disappear. Some are calling it Tax Armageddon. The decisions made in 2024 elections will determine whether these cuts stick around, and what happens could reshape your financial future for years to come. Two candidates are offering two very different futures for America's tax system, and only one will shape what your paycheck, retirement, and cost of living will look like in just a few short years. America's growing frustration with taxes. Let's start with where Americans stand on taxes today. A recent survey revealed that 56% of Americans feel they are paying too much in federal income tax, but only 22% believe they are getting enough value from the government in return. That's a significant gap between what people pay and what they feel they receive in return, highlighting the frustration many feel with the current tax system. On top of that, 57% believe reducing the national debt should be a top priority for the President and the Congress. The question is, how do you lower taxes, maintain essential public services, and reduce the national deficit, all at the same time? That's the challenge at the core of the 2024 election. It's a dilemma, and there is no easy answer. This complex balance of taxation, public services, and debt reduction is what each candidate is trying to address in their tax plans. And it's not just about numbers. For millions of Americans, it's about daily survival, being able to afford healthcare, education, and other vital services while also keeping more of their hard-earned money. The 2017 tax cuts. What's at stake? In 2017, President Trump signed the Tax Cuts and Jobs Act, TCJA, which dramatically reshaped the tax system. It doubled the standard deduction, which means more people took advantage of simplified tax filing. Today, only 9% of Americans itemize their deductions, a historic low. This was seen as a big win for simplifying the tax code, but the benefits of the tax reform weren't equally shared. Here's where things get really complicated. These tax cuts are set to expire in 2025, and when they do, 62% of taxpayers will see their taxes rise. That's the majority of Americans, and the consequences would be felt across income groups. Let's put the numbers in perspective. The average middle-income taxpayer saved around $900 per year. But for the top 1%, the tax savings were staggering, around $61,000 a year. That's a huge gap, and it highlights how the tax reform disproportionately benefited wealthier Americans. If these cuts expire, the financial impact on middle-class Americans will be significant. The average taxpayer will feel it in their paycheck, making day-to-day expenses like groceries, housing, and healthcare harder to manage. That's why the 2024 election is so critical, because it will decide the future of these tax cuts. Trump's 2024 tax vision. So, what's Trump's plan? If he were to win the 2024 elections, his strategy is to extend the Tax Cut and Jobs Act (TCJA) beyond 2025, ensuring those tax cuts remain in place. This would keep taxes lower for millions of Americans, especially those in higher income brackets. But that's not all. Trump also wants to eliminate taxes on tips and Social Security benefits. For service industry workers like waiters and bartenders, the tax exemption on tips would be a game changer. It would mean more take-home pay for people who rely on tips as a major part of their income. Similarly, eliminating taxes on Social Security benefits would give seniors more financial freedom, particularly those living on fixed incomes. But here's the trade-off. The Congressional Budget Office (CBO) estimates that extending these tax cuts could increase the federal deficit by $4.5 trillion over the next decade, including the interest payments. That's a $1.1 trillion more than current projections for 2023. While these cuts would be popular with many voters, especially in the service and senior communities, the long-term impact on the national debt could be huge. The question is whether short-term tax relief is worth the burden of an ever-growing deficit that future generations will have to bear. Harris's tax plan, a different direction? Vice President Kamala Harris has a very different vision for the US tax code. While Trump's approach is about maintaining tax cuts, Harris's focus is on increasing benefits for lower and middle-income families. Her plan starts with expanding the child tax credit, which was doubled from $1,000 to $2,000 under the TCJA. Harris aims to go even further, offering a refundable credit for families that don't owe taxes, effectively providing additional income for those who need it the most. But that's not all. Harris proposes a $6,000 tax credit for families with newborns, up to $25,000 in credits for the first-time home buyers. These tax credits are designed to help families manage rising costs from healthcare to housing. However, some economists argue that these measures could push home prices even higher by driving up demand without increasing supply. Without addressing the fundamental issue of housing vulnerability, simply giving people more money to buy homes could create more competition and higher prices. To fund these benefits, Harris is looking to raise taxes on corporations and the wealthiest Americans. Her plan includes raising the corporate tax rate from 21% to 28% and implementing a 25% minimum tax on individuals with more than $100 million in wealth. That would target ultra-wealthy individuals who have avoided higher taxes by relying on capital gains and other forms of income that aren't taxed as heavily as wages. For households earning over $1 million, Harris is proposing higher taxes on long-term capital gains as well, ensuring that those with significant investment income contribute more to funding her expanded credits. The deficit debate: Trump versus Harris. Now, both candidates' tax plans come with significant consequences for the federal deficit, but in very different ways. Trump's proposal to extend tax cuts could balloon the deficit by $4.5 trillion over the next decade, making it harder for future governments to balance the budget. On the other hand, Harris's expanded tax credit for families and home buyers would increase the deficit by $1.7 trillion, according to estimates from the Committee for a Responsible Federal Budget. The key difference lies in how each candidate plans to address the deficit. Harris's plan attempts to offset the cost of her benefits by taxing corporations and wealthy individuals. But the big question remains, will these measures be enough to fully cover the cost of her proposed benefits? While many Americans might benefit from immediate tax relief on expanded credits, both plans could lead to significant long-term debt. And while taxing corporations and the wealthy might seem like a solution, it remains to be seen whether this strategy will bring in enough revenue to make a real dent in the growing deficit. The bigger economic picture. It's not just about taxes, it's about the bigger picture of the US economy. The US already taxes its citizens heavily compared to other developing nations, but we spend even higher as compared to those same countries, leading to a rapidly growing deficit. Currently, much of the money spent by the US government is borrowed from foreign investors, meaning that the returns on that debt leave the country rather than benefiting Americans. This outflow of funds affects everything from infrastructure development to job creation, and this also puts more pressure on the US economy in the long run. Borrowing works in the short term, but eventually the country will have to balance its books. If we keep relying on borrowing to fund government spending, future generations will be left to deal with the consequences. The decisions made in the 2024 election will play a critical role in determining whether the US continues down a path of borrowing or finally brings its taxes and spending into alignment. This election is about much more than just tax policy. It's about the future of the US economy. Whether you side with Trump's plan to extend tax cuts or Harris's push for expanding benefits funded by taxing corporations and the wealthy, the choices made in 2024 will directly affect your paycheck, your retirement, and your daily expenses. The future of America's financial landscape hangs in the balance, and your vote will determine which path the country takes. These decisions will impact every household, every paycheck, and every tax dollar spent. So, as the 2024 election approaches, make sure you stay informed, stay engaged, and more importantly, make your voice heard.